Hello everybody, welcome to the webinar. We'll get started at this time. My name is Troy, I'm a Senior Account Manager with AvaTrade. We'll be doing the technical analysis webinar this afternoon. Before we get going, let's do a quick systems check. Just type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great, thanks. I've got enough responses. Looks like we're up and running just fine. If anyone runs into any problems as we go along, just let me know. There are going to be some huge movements today on the charts. There already have been, but there will be more. We've got the non-farm payroll, big economic announcements coming out of the U.S. today. It's typically the first Friday of every month, which is today. And so we're going to see what's happening, and sometimes it's the second Friday if the first Wednesday is not the first. So actually we're on the second Friday moving, or no, I apologize. We're on the first Friday still, but sometimes it is on the second Friday. I'm talking about the non-farm payrolls if Wednesday doesn't fall at least on the first, but it did. So being the first Friday of the month, we've got some huge announcements coming, and we'll be able to get some nice technical looks with our technical analysis. So keep in mind as we go along, no one trade is guaranteed to profit. I think we all understand that there's a risk involved with each trade that you make, but that's why you use different risk management techniques, whether you're using stop loss or hedge positions, or maybe using AvaProtect, which is a special risk management tool that you can use in the AvaTrade Go mobile app, which maybe we'll take a quick look at as well. It can really be useful during times like now when you expect some large volatility with big announcements. Keep in mind as we go forward, what we cover is meant to be educational in nature, to add some ideas, some strategies, some tools to your tool belt, so to speak, to hopefully improve the P&L on your trading at the end of the day, end of the week, etc. What we cover is not meant to be financial advisement of any kind. Now, when we look at technical analysis, we're basically looking at the historical movements on the chart, which we will do in a moment. We'll get on the live charts and take a look at what's happened in the historical data. And then we look for either two different ways of doing our technical analysis. One would be manual methods of interpreting the present price compared to the historical movements and trying to find an advantageous entry point for buying or for selling, and also for getting out of the trade at a spot that makes sense according to the historical movements. And we'll do some manual methods of price level finding, trends, etc., to get some ideas of where you might want to get in and out of trades on some different assets. Certainly the fundamental stuff that's happening today will also drive these movements and maybe cause some breakthroughs even on some of these price levels. And we'll talk about ways of preparing for that just in case that happens without even having to try and guess what the numbers will be on these announcements coming up. The other type of technical analysis would be to use indicators. And sometimes during the webinars, we'll throw on some different indicators, whether it's Bollinger Bands or Fibonacci levels or something like that, to assist you in finding the proper technical entry points that you trust for getting in and out of trades. As we go along, feel free to ask questions, give input, give suggestions that I can share with others. I'm happy to do so. And it adds to the content in a positive way most times. So if you did want to make use of the risk management tools that are found on the AvaTrade Go mobile app, and it doesn't matter if you're trading on the MetaTrader 4 platform or the MetaTrader 5 platform, you can use the AvaTrade Go mobile app to access both platforms from your mobile devices. And so it's in both the Apple App Store, the Google Play App Store. And what you'll see are the features within the order window. Make it so that the order window, before you ever buy or sell on a position, the order window acts as a trade calculator and risk management tool for you. So you know the exact amount that's required for margin in order to open a trade as you're setting it up, based on the trade size, the lot size. You'll know the position size value. You'll know if you program a take profit and stop loss price. It'll tell you right over here exactly how much you stand to make, exactly how much you're risking with the trade size that you've set up in the order window and to the stop loss price that you put. So, and it calculates everything into your account currency. So it's a very nice risk management tool. And also on top of that, you can use AvaProtect. So if you choose that on gold, silver, or FX pairings, AvaProtect is available to protect against losses for defined time periods. So in this example, it says 1 day. So if you had this protection on, I don't know, Euro USD already, and you had a trade open, and here comes the NFP announcements, and it goes 100 pips the wrong way, you're only down what you paid for the premium of the coverage, and any losses on the trade would be added back as long as it closes during the covered time period. So it can be a very nice tool. And obviously, if it goes the right way, which is what you're hoping, all of the profit is yours. You already paid the small premium up front. So it's a very nice tool, especially during times that you think there could be volatility, and especially on assets that you think could have big movement during that volatility, like gold and some specific currency pairings based on what the economic news might be that you think could drive the movement. All right, so what's happening fundamentally today? We've already alluded to it. We've got these announcements in about 23 minutes. Okay, these are the big ones today. There are some announcements out of Canada that will certainly help move the Canadian dollar. You might try some pairings with Canadian JPY, and we'll take a look at the charts maybe on that. We'll also look at maybe USD JPY. There certainly could be some huge movements. Anyone understand why I might be saying pair USD and JPY, Canadian and JPY? You know, if there's really bad news and the USD weakens, what typically happens to the yen when there's bad news? Or if there's bad news for the Canadian announcements and the Canadian weakens, why might you expect the yen to strengthen and that to be a good pairing to get good price action? The yen is considered what? A safe haven currency, right? The yen is a safe haven currency, just like gold and some other safe haven assets that are out there, Swiss franc as well. So big movement coming. We'll take a look at the charts soon. And by the way, you notice I didn't try and guess what these numbers will be. Okay, non-farm payrolls, will it be higher than expected or worse than expected? 1.4 million new jobs expected outside of the farming industry. Maybe it'll be better than expected. Maybe it'll be worse, right? Unless you have some kind of inside information, you don't know for sure. But what we pretty much know for sure is that there'll probably be some large movements on U.S. related assets. Okay, so and there are some other announcements as well that are pretty big. Average earnings, that's looked at sometimes closer than the jobs, meaning, okay, there were good jobs hired, but are they paying more? Is the hourly wage, average hourly wage going up? And so we'll be looking at that as well after the numbers come in. We'll look at average weekly hours, average hourly earnings. This is a big one, average hourly earnings. It's a sign of whether there's inflation or not just hiring, which is important. Okay, so U.S. job growth seen slowing. So this is the guess that maybe the numbers aren't going to be as good as expected. And the expectations are less, right? Non-farm payrolls, expectation 1.4 million new jobs, which is an insane number, by the way. Usually it's like 200,000 new jobs is a good number in the U.S. And we're looking at 1.4 million being the expectation here. And if it comes in at a million or something, being missing expectations and maybe being considered bad news. So the last month it was 1.8 million almost, 1.76 million. So 1.4 million would be a decrease. And that's what this headline is saying. U.S. job growth seen slowing. The expectation is less, 1.4 million new jobs, than last month, 1.8 million new jobs. It doesn't mean bad news. It just means the big rush was when the economy first opened up and businesses were allowed to start hiring again. And obviously, at some point, that pace has to slow down. There's not going to be 1.5 million jobs every month moving forward. Normal, like I said, was 200,000 jobs, maybe 300,000 jobs on a really good month. So eventually, the numbers will come back down to that. So as I alluded to as well, we'll probably be looking at those hourly earnings. What's happening with that? Okay, so White House asks U.S. agencies to detail all China-related funding. Here it goes again, right? U.S.-China tension. Okay, U.S. looking into everything China, because basically the U.S. doesn't trust China. That's what it comes down to. Even with their trade deals, they don't trust each other. And then when we look at Australia also, staring down China, challenging them, not trusting them, looking into things. And so even smaller economies like Australia, and they've got a pretty big economy, but smaller compared to the US and China, are starting to look into China and maybe start to be tougher as Trump has been on China. Other countries seem to be moving into that. And so this type of tension, remember there's two types of fundamental news. This could be the unexpected type that could break at any time. Tension and headlines like this between big economies in the world, that's a source of potential fear going into the weekend. So be careful carrying your pending orders or your open positions through the weekend. All right, so let's get into the technical analysis, since this is what the webinar's intended to be about. Someone's asking, how can NFP impact gold today? Listen, if the numbers come in bad out of the US, and by bad I mean maybe worse than expected, but still maybe 1 million new jobs created or something like that, maybe the hourly earnings, the average weekly earnings don't go up, maybe they drop or something, and that creates some fear in the markets. You know, it's weird, but what we've been seeing is with fear, where gold usually goes up as a safe haven, we've seen gold pulling down because the USD has been strengthening with fear. People have been liquidating gold and buying into the USD as a safe haven, believe it or not. The USD has been strengthening more than gold during times of these types of announcements where there could be increased fear. So, or the opposite, good numbers, and we might see the USD weaken and gold go up if the past month's trends continue. Now, in the bigger picture, gold's been climbing in general, but with these types of announcements and economic numbers, we've seen a lot of the opposite of what you might expect with movements. With that said, and again, I don't try and guess the numbers. I don't try and guess the movements. I think certainly we're going to see large movements in gold. The USD is going to strengthen or weaken with these large announcements coming, and gold itself, whether it's paired against the USD or the euro or whatever, also will have some large momentum one way or another, most likely with these announcements. So it's a good question, Alex, and I expect some good movement, some good technical breakthroughs or bounces with gold as well. So I wanted to show you all, if you were in the webinar earlier this week, we did it Wednesday, we were looking at this movement up here, and we drew, this is the S&P 500, and we saw the breakthrough here, right? And we were watching during the webinar saying, okay, you could have traded on the breakthrough, technical analysis, here's your resistance. Once it broke the resistance, you could have got in with a buy stop pending order, could have already had it up there, and up it went. So what we did during the webinar is we said, okay, you can trade up off this support level, and we did a couple small trades on this bounce right here, okay? And they paid out for scalps. But we also said, what if news comes that's unexpected? What if there's bad news about, you know, the pandemic, about the vaccine development, whatever it might be? If one of those headlines breaks that swings the market, what kind of pending order could we put here to be ready in case this support level broke? And so we placed a pending order Wednesday below this support level when the movement was up here, which was against the fundamental news at the time. We said if the fundamental news swings, it could break the support. And if it breaks the support, it could plunge. And so we prepared a pending order. And sure enough, what happened? The support broke with an unexpected headline. What was the headline? Does anybody know? What caused what fundamental news that was unexpected caused this support level to break and the plunge of the indices, the stocks yesterday. Something to do with the US. Dr. Fauci, the task force doctor in the US for the coronavirus task force, he came out and what did he say about vaccines? Yeah, exactly. He was saying that maybe the vaccines won't be ready. There was some talk about jobless data, but the big story was vaccine. That his opinion was it might not be ready till the end of the year, not in a month or two, like Trump keeps trying to be positive in the U.S. and say, oh, we might have something ready sooner. And the markets were happy about that. And then when this Dr. Fauci says, no, my opinion, not till the end of the year, the markets plunged right as soon as that headline broke. And so those are the things you just don't know are going to happen. And that's how you prepare for the unknown with your technical analysis. What was the technical entry point? It was if this support level here that just became a support level that day, it was resistance, and then it broke above and became support. Okay, that's the way support and resistance tends to work. There's a price level that it takes some kind of momentum to break. And once it broke above it on Wednesday, it became support. Became support here. Okay, and so as we looked at it, we said if we put a pending order below this old resistance here, that should be support. If we put a pending order down here, if it breaks that support, maybe it was because of some kind of unexpected bad news, and we prepared a pending order. And so if we look at the account history, we see, okay, some of the small trades we were taking, we paid 14, we lost 28, we lost 450, we made 56. Look at the pending order, what I call putting a trip line in the market. It was at a spot where it was below a support level. That's the technical analysis aspect of it. It was below a support level that just got broke through by positive news. And so in your mind, you say, I don't know what it could be, but if it breaks back below this support level, it took big news to make it go above it. Whatever it is, it would have to be big news to break it. And so we put the trip line in the market, the pending sell stop below that support. And sure enough, a headline broke. It was the vaccine comment, and down went the market. It triggered the sell position and ended up paying over 5,000. Okay, that's all it takes to be successful with trading. And how much did we risk on that? That simulation was risking only a little movement back above, because if it's a true breakthrough, you should have a breakthrough candle like this. Not usually that big, but a breakthrough candle that is larger than the other candles and doesn't come running back above. So your entry point was below the support, your stop loss is right back above, risking only a little bit. That's the technical analysis of it. The opportunistic entry point just below a support level that if it breaks it, you expect momentum down. And that's exactly what happened in this case. How many times out of 10 do you have to be right on something like this to profit? You're risking 300. You make 5,000. You could take a shot with trip lines in the market like that with your technical analysis above and below with sell stops and buy stop pending orders. And one of them's going to happen eventually. And we see it here. We see one of them happen and a huge payout. Okay. So this is the power of technical analysis combined with understanding that it's the fundamental analysis that drives those breakthroughs technically. Okay. Georgios, good question. And for everybody listening, Georgios is saying, nice tactic, nice strategy, but how do you know when to close it? It could be time related. You give it X amount of time. It can be goal related. Maybe you already programmed to take profit at 5% profit on your account. Maybe you're risking 1% back up with your trade size to the stop loss, and you want to make potentially 5 times that on the way down. Or maybe you have a dollar amount that you want to make. Okay, there's no one answer to that. A good strategy that I see is you might pick out a support level You say, okay, if it breaks the support here, the next major support level is down here. Okay, support, support. So you expect this plunge maybe to slow at the first support level. Had I taken profit there, okay, I would have missed some of my profit because it kept falling further. But a good technical strategy is if you're selling and you enter, the momentum tends to slow down once it hits the next major support level. And that might be a spot to either take all of the profit or a partial close to take some of the profit. Okay, so Brian, good question. What time frame should you use? And it depends whether you're scalping, which we did. If you look back at Wednesday's webinar, you'll see the scalping we did. We were looking at 5-minute, 15-minute candles. We were trading up off just this support level. On this little movement looked big because it was 5-minute candles, taking $50 here, $30 there, that sort of thing. If you're talking about a longer term move, then you're looking at 4-hour candles, 1-day candles, etc. Okay, your scalpers are usually on the lower candles, but I always say you should take an outside in or an inside out look. Even if I'm only scalping, I want to know how long is that support level that I'm seeing on the 5-minute candles, how long has it been there? So then I look at the 1 hour, the 4 hour, the 1 day, the 1 week, and then you might say, wow, this is a really important support level. I see that not only on the 5-minute candles did it bounce and hold 4 or 5 times, but when you look at the 1-day candles or something bigger, you might say, wow, this price has been tested for 6 months and hasn't broke, or for a month and hasn't broke, etc. Then it becomes more significant to you that it will take more momentum to break that support or that resistance level, because the longer it's been there and the more it's been tested, you realize it's going to take some big news to break it. And typically then you get a larger breakthrough movement because that level has existed longer. It took more momentum to break it. Okay, so there's no one answer to that, Brian, but in general, the last look I take is like 5-minute candles or something like that if I'm scalping short movements. And the last look I take is probably back out to the 4-hour candles, 1-day candles if it's a more long-term move. But I still use the 5-minute, 15-minute to zero in on the exact entry point I would like. Okay, very good questions. All right, so the question is, great. If you took advantage of this technical breakthrough with a simple pending order from Wednesday's webinar, what do you do now? What's the move now? We've got major announcements coming in 8 minutes. What do we do? Everybody's different. Some people are trying to guess what those numbers are going to be. Okay, unless you're Nostradamus and you can predict the future, probably in the long run you're not going to be successful. Buying right now on the S&P 500 because you just know that the numbers are going to be better than expected. How can you know for sure, right? So you've got to have strategies that go after profit and manage risk in some way and make sense for a situation where maybe you have an idea about what the numbers will be, but more than anything, you have a stronger idea that just for sure there'll be big movement, right? So if we're looking at 5-minute candles, I see a support level down here, okay? So many times when large announcements come, you're going to see a big spike up, a big spike back down, no matter what the numbers are. And if you're just trying to have short little in and out, right at the time of the announcement, there's slippage. There could be slippage on a currency pairing by several pips. And you're trying to scalp and you completely miss your entry point and you end up losing on a movement that went the right direction. And so sometimes that just doesn't work, trying to do market timing trades right at the time of a big announcement. So I've personally found better success looking for support levels, price levels a little bit away from where the movement is currently, and either placing some pending orders or just waiting and watching the movement to see when you might want to buy or sell, okay, after you've seen the numbers and you already know what they are. Because remember, hindsight is 20/20. If I see the numbers are better than expected, Now I expect it to go up. Now if I see it spike way down to a support level, wow, now that's an opportunistic entry point. Now I'll buy, right? Or the opposite. If the numbers are worse than expected and initially, let's say it initially drops, but then spikes back up, I say, okay, once it reaches resistance, now I'll sell because I already know now that the numbers were worse than expected. And the game playing that everyone's doing, causing bouncing up and down, wait for your entry point, technically speaking, to go in the direction that the fundamental news tells you think you should trade. With hindsight, already knowing the numbers, you don't have to try and guess it, okay? Try and take the guess part out of things, and you probably will find better success. So I see on the S&P 500 a support level here, okay? And that's a good 50, from 54 down to 37. You could easily put a pending buy limit here, okay? A pending buy limit, buys if the price comes down and hits here. So, and this is just an example. I'm not telling you should take these trades. Just an example that if I went and I said market execution, let's go to pending, and let me put a buy limit down at X price, okay? Then what we're going to see is a pending order waiting down here. And if the movement comes down and hits that price, then maybe it'll bounce off the support. So I can simply go pending order, and we might as well go ahead and set one up. Why not? Okay, pending order, 34, 38. And stop loss. And by the way, it could gap past your stop loss. If the news is really bad and the S&P 500 gaps past, you could lose more past your stop loss. So it's a little risky with announcements like this. 34, 34, let's say. Stop loss, even down 34, 30. Okay. Just as an example. And my take profit, maybe I put it up here at the first resistance level, 34.70. And you know, the market went down so much yesterday. If there's good news, there could be a lot of people wanting to buy, right? So just technically speaking, the market's a bit sold now. I wouldn't say oversold, but it's sold after yesterday's pullback. So there's some room to climb. It's reached highs much higher than it's at now in the past week, past few days. So there's some reason to think it could climb. And then you can place that pending order. So now I've got an entry point here. If it initially pushes down, even with good news, then you take a buy. It's just above this support. If it breaks the support and reaches here, you bail out on it. And if it bounces, you've got a much larger potential profit than what you're risking from down here. Now, is it possible there could be good news and it just goes shooting upward? Of course, no problem. So what can we put up here? We could put a pending order up here if it breaks the resistance to buy. What kind of pending order buys from a higher price? If it broke past this resistance point here, you see this is the top of this resistance right here, this wick. If it breaks above that, it's got clear sailing all the way up to here. Okay, the next resistance level would be here where the support level broke. So if it clears this height, it could run up the rest of the way. So this would be a confirmatory move. If it breaks through, you're buying. Yeah, it's a buy stop. Exactly, it's a buy stop. If you're more comfortable with that, then you could get rid of the buy limit, because buying in a dropping market sometimes doesn't work out, right? This is more of a technical move for waiting for a reversal. This is a technical move going with confirmatory movement. If it breaks through the resistance, then you figure, wow, the news must have been really good. Now I'll buy. Okay, so that's a buy stop, buying from a higher point. And we could prepare that as well. And even if it doesn't hit today, it could hit next week, right? Like my pending sell stop from Wednesday didn't trigger until yesterday. Okay, so you can leave these trip lines in the market. So S&P 500, pending order, buy stop. That's how you'd set it up, and you'd put your price, okay? Now, I was going to set that up, but let's go and look at what kind of movements we see, what kind of numbers we see, because they're about to come out. There they are. They just came up on the screen. So worse than expected. Not by much, not by much. 1.4 million, 1.37 million came in. If you round that off, it's 1.4. But the expectation was a decrease from the prior month, and it did decrease. It even decreased by a little more than expected. Okay, so not horrible news, but certainly not better than expected news. Okay, so that's enough that could maybe push the markets down and then allow it to bounce back up when it hits a low price that the buyers like, because it's worse than expected news, but not horrible news. If you read the tea leaves here, and look at this, average hourly earnings, that was not expected. Okay, better than expected. Remember I said that people look at that more sometimes than the jobs. The average hourly earnings and average weekly hours both went up more than expected. Okay, so that's really good news for the job market in the US, that average hourly earnings went up almost 5%, 4.7%. And the number of weekly hours creeped up just a hair from the expectation. So if we look at the Canadian, worse than expected numbers on job increase. Instead of 275,000 jobs, it's 245,000. And the unemployment rate actually went up in Canada. The unemployment rate went up in Canada. So not horrible news. It missed the number by just a little bit and didn't miss by much here, but certainly not good news out of Canada. But that's pretty solid news out of the US. Nearly the job increase that was expected, and average hourly earnings and number of hours worked better than expected. So if we go back to the platform, we can see, let's go 5-minute candles, see our entry points down here if we wanted to get in. Now, let's say I want to buy now because the news was better than I thought it would be. Okay, fine. So I buy, I do a market buy. Where should I put my stop loss if I was buying on this because I saw the news was better than expected? Okay, so now, by the way, if you're scalping, you could close now, right? It just went up. I was up $50 right now, 60, 70. I can close. How hard was that to wait, see the information and say, okay, I'll take that profit, $113. Hindsight's 2020, right? We just saw the numbers were better than expected on hourly earnings and almost right in line with what was expected on the number of jobs, a little worse than expected, but even going into it, we understood average hourly earnings and number of hours worked each week sometimes are leaned on more heavily as being important beyond the number of jobs that were hired. So we see a spike going up, and you obviously didn't have to do a scalp. You could hang on to this and ride a trade up further. Now, where would your stop loss be if you were buying on this? Probably down here below this support level somewhere. And you could even put it below this support level if you wanted less of a risk. Okay, less of a risk would be below this support level, or a little larger stop loss, so that if it breaks this support, it would have to break the next one for you to give up, would be down here. And I suspect, and it happens all the time with NFP, these assets that you think should keep rising, they'll probably pull back down for a while before they go on the longer term direction that you expect. Okay, you get short movements, you get pullbacks, and then you get longer movements typically. Okay, so someone's asking to look at gold, so let's do that. We see gold spiked down. Okay, I would suspect that if you wanted to take some kind of move on gold, let's say you buy on gold. I just, as an example, took a buy position. Then we go to 1 hour candles. We say, okay, where would my support level be that I don't think it should break if I think gold should go up? And so I look here and I say, okay, here's a support level here. Support, and it's been ranging between here and here. Okay, ranging down, up, down, up, down. So if this is going to rise and it's going to test a drop first, then my stop loss maybe would be below this support level to have a limited type risk. So maybe down at 19.19, about $10 down in the price. So let me do that. Modifier delete, stop loss, 19.19. Okay. Now, you might say, well, why would you buy on gold when we just saw maybe better than expected numbers on hourly earnings and some other weekly hours out of the US? Remember I said that the USD has been a safe haven, and with good news, the USD has actually been weakening, and here gold is paired against the USD. And if people are going out of the USD, still understanding that there's a global pandemic, they might still want to buy into gold in the bigger picture. And so gold could actually go up with good economic news because people are leaving the USD and maybe getting back into gold to handle the pandemic with a safe haven like gold still until this whole pandemic ends. So there's been some backwards type movement like that with gold, with good news driving gold down a bit, and bad news. I'm sorry, with good news actually driving gold up a bit, and bad news driving it down. And we're looking at this as maybe more good news than bad that we just looked at with those announcements. And so maybe we expect gold to rise, which is the opposite of what you'd normally expect with good economic news, just because of the way the pandemic has caused gold to move. Okay. In general, the bigger picture, the pandemic's been causing gold to hit highs, to keep climbing. And then with short spurts of dropping when there's bad economic news, which is maybe the opposite of what you'd expect. So with that said, anyways, even if you're not thinking about that whole relationship with how the fundamentals drive gold, this is a nice support level. It's an opportunistic entry point. Gold pushed down to an area where it's been ranging down, back up, down, back up, down. Maybe it goes back up to the resistance again. Okay, so if you're looking to take a quick profit, about the same potential profit as risk, then 1942.5 might be a spot to try and take profit. And technically speaking, it's a nice ranging movement to buy off of, because it was at the low part of a range where it's been going up and down. Okay, so if we modify this and program a take profit, maybe it's up at the resistance up here, 1940, even 1944. Okay, good. So that's something we could let run, see what happens, going after kind of the same amount of potential profit as loss. Okay. Any other assets that anyone wants to request? Probably oil would be interesting to look at. What do you think happens to oil when there's better than expected numbers out of the number one economy in the world, like the US? Wages increasing, number of hours worked increasing, still about 1.4 million more jobs added. In the bigger picture, what does that tend to do for oil? And yeah, we could take a look at NASDAQ as well. Oil tends to go up with good economic news, right? So if I'm looking at crude oil and I say, I see a support level here, okay, it hit here and bounced. That was a breakthrough, became resistance, it was a breakthrough back up. So if oil hits this price, that's a support level from here, okay? So you might say oil is downtrending now, but maybe it bounces off this support level right around 41.2. So maybe you say, okay, that's close to where the price is now. So maybe I buy, okay? I take a buy even in a downtrend. Why? Because I see a support level and I don't have to risk much. I'll put my stop loss at below two support levels. Here's one, and here's the next support level here. So support level, bounce up. Here's the next support level here, where it bounced and went up. So I'll give myself two shots. One support level would have to be broken, and two support levels would have to be broken before I give up. And so my stop loss is at 40.7. Why am I buying? Because in my personal opinion, those numbers were not bad news for the economy that we just looked at. And the technical entry points are important to try and be opportunistic with when you get out of a move that you already opened. The technical exit points, I should say, in this case. So it would have broken two support levels if it gets down to 40.7. So very limited risk distance-wise on the chart. You take the appropriate trade size for your balance in a move like this. I say limited risk. That trade size with the demo balance I have here is very limited risk. That trade size with 1,000 in your balance is not limited risk. That's pretty high risk. So you take trade sizes that make sense to you and only take moves that also make sense to you technically and fundamentally. So it's testing the first support level as I expected, right? Testing. If it breaks it, we've got to back up with another support level to see if eventually it bounces back up. Where might you take your profit? If we get a run up on oil, it may test this resistance level first. So if you're scalping, this is your first resistance level. You might get out at 41.7. If you're more of a long-term move, there's another resistance level here. Support, 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 breakthrough. Okay, so first resistance for a scalper, second resistance for a little more patient move. It's completely up to you what way you'd handle that, right? So I'll just let this run a bit and see what happens with this. So I'll put a take profit up at 42.30. 42.3 gets me up near, or maybe 42.2 gets me up near that resistance up here. Here's this resistance, getting out just before that, or maybe a little bit closer to it. Right there, okay? So a little more potential profit than I am risking, okay? And let's take a look then at the NASDAQ. And it's interesting, if you go back and check and see if any new headlines came out, okay? Let's go to the landing page. There it is, breaking news, non-farm payrolls up 1.37 in August, unemployment rate falls to 8.4%. That was the other number that was listed there. I didn't mention it because it's expected to fall. It's artificially high, the unemployment rate, which is why Canada's unemployment rate going up further is really bad news. The unemployment rate in the US dropped to 8.4% now. It was up near 20 for a while. So back down to 8.4. Trump had it down to 2.5%, somewhere near there before the pandemic. So that's really good news as well. So that gives you a little bit more. And look at volatility's down now. It's a clear picture. The futures are green, volatility's down, headlines are being viewed as positive, not negative. Okay, so now that maybe gives you more confidence in what direction you'd prefer to trade. So we look at the NASDAQ and we say, look at 5-minute candles. Looks like it's trying to climb and break through. So you might say, okay, let me ride this wave. Let me buy. And by the way, you might take a smaller trade on NASDAQ than you would on the S&P 500 because it has a larger point value in that indice. And the same trade size gives you more exposure on the NASDAQ, more risk, more reward compared to the S&P 500. I just went ahead and took the same trade size because I'm on a demo. But if you're risk managing and you want each move to be similar exposure, you probably want smaller trade sizes on NASDAQ than you would do on S&P 500, okay? Just to understand. There's a resistance level here on NASDAQ. Someone's asking, where might you take profit? I see the first resistance here. You see here? Resistance, resistance, resistance. So if I'm programming a take profit here, it's probably 11,700, okay? 11,700 on NASDAQ if I'm scalping. Or way up here if it's long term, right? Honestly, I think this has a chance, not necessarily today, but to reach this all-time high up here in the coming days and weeks. Okay, so a longer term move here is not a bad idea either necessarily to take a shot at that. So you know, if I'm putting a take profit, 11,700, it's almost there already. Okay, that's a scalper. A scalper could close it now, right? $200 profit it was just showing. So the market's moving the direction right now that we were kind of expecting after looking at the numbers, okay? Where's the support? It's way down here. We got in late, but now there was a breakthrough off of this resistance here. See, resistance, resistance. These are 5-minute candles. Resistance, 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 breakthrough. So if you want to limit your risk to a small amount and get out quick if it goes the wrong way, you would put your stop loss maybe right down here below this little breakthrough. This was a breakthrough candle on the 5-minute candles, okay? So you may put your stop loss just down here. Now a scalper would say, okay, let me take my 100 or 150, 200 profit, okay? It's up to you how you play that. There's 150 profit. I just went ahead and closed it. All right. Now I have smaller exposure on my S&P 500 move, which maybe I'm more patient with. Maybe I let that one run longer, because if it hits my stop loss on the S&P 500, that same trade size is a smaller exposure. Okay, you could play it different ways, but type OK if you see the power here of combining the fundamental news after we already saw it, not trying to guess it necessarily, after we already saw it, then using your technical analysis to find proper entry points and directions to get in and out. I mean, everything we've looked at and done has gone the way that we predicted. Why? Because we're using support, resistance, technical analysis levels, and we're going in the direction that the momentum is sending us based on the fundamental news as we know it now. Just type OK if you're okay with this. If you want me to go over anything more here on the NASDAQ, I will. Okay, here's that first price level. I said right around 700 is the first resistance. Likely when it hits this area, it's going to pull back. Okay, so the scalper gets out right about now. All right, scalper gets out right about now. Patient trader, take profit might be up here. Okay, it might challenge this high point, might even challenge it today. All right, great. So I've got some responses. A lot of you are just watching and not communicating. That's fine as well. Just taking things in. And so we see oil starting to go the right way as well. And our gold move has come back. And the S&P 500 never triggered. It never dropped. The momentum didn't go down. But we've got gold and crude oil going. My S&P 500 would be a more patient move if it triggered, because like I said, it would have a smaller exposure on that move. And for a second there, I was saying, I was thinking we already opened the S&P 500, but we only put the pending. I closed the S&P 500 manual trade, I think, the market move. So it broke that resistance as I thought it could. And so now the take profit from the scalper, you already took it. Now the next resistance is up here, and it's a strong likelihood that it would hit this resistance before it would ever break this support, because it's got strong momentum. So if you're looking for a more patient stop loss, you can take a smaller type trade, put your stop loss all the way below this support level down here, and a take profit here. And it looks like, technically speaking, a good likelihood you could profit, okay? You could do that as well. Someone's saying, what about this price level? Okay, that's a resistance level as well. I did the two extremes, Brian. I did scalping, getting out quick, which was that first price level that it hit and broke. And then I said, if you're more patient, longer term, I took the top one. But you're right, there's a middle ground, and it just hit the middle ground. You see, it just hit that price level that you mentioned. And so as you're seeing, you have options here with how patient you want to be. But it's not by accident that we picked the right direction here, okay? It's not hard to do, and you don't have to guess the market before announcements come in. You can look at the announcements after they come in, and then wait for your technical entry points that make sense and go in the direction with hindsight, with 20/20 vision. Okay. All right, everybody. I think this has been probably a pretty successful demonstration. I'll go ahead and take some profit on oil. Okay. Maybe gold will be more patient and let it run. Now here comes a little pullback, right? So where Brian was pointing out was deemed by more people to be a more significant resistance level because now it's pulling back. And it's not by chance that that's where it pulled back. Look, it's a support level, support, support, support. As I said, the scalper already got out at the first resistance. The intermediate trader maybe waited for the second one to take profit. And the more patient trader, well, maybe you did a partial close here and you left the rest open with a take profit for the top one. Okay? And partial closes are nice. You can preserve profit enough to guarantee profit, but leave some of it open for a more patient move also, for a longer term move. Just be careful carrying trades through the weekend. Many times, if you've got profits you like, maybe you close them off before the weekend in case the news swings over the weekend, because the prices can gap against you badly when the market reopens on Sunday. So I know you have to pay a little more in spreads to close and then reopen later, but sometimes it's well worth doing that because of the unknown through the weekend. Okay, any last questions before we end things? We've been going for about an hour now. We see the strength of that resistance level, but I suspect eventually here that resistance level will break. What kind of pending order can you put now? Let's say you closed your trade at this resistance. What kind of pending order do you put here? If it breaks that resistance, you get back in and take profit up here. What kind of pending order would do that? Yeah, buy stop. Exactly, buy stop. So if you got out where Brian said, you got a larger profit. If you got out where I first suggested, you got a nice profit, but not as big. And if you want to get back in, if you closed the trades at those levels, then to wait for confirmation of a continued uptrend, you put a buy stop pending order just above this resistance level. Support, support, breakthrough, resistance. At the support level resistance, if it breaks through, you might see a reverse of this drop. Breakthrough on the upside could do the opposite in the other direction. No guarantee, but trading's not about guarantees, it's about potential, right? Okay, everybody, thank you for joining. Good luck with your trading. I think there's huge potential here between now and the close of the market today. So pick your spots, maybe put some pending orders in, and keep your eye open if you're watching the charts for your spots for market moves. Okay, everybody, thanks for joining. Bye for now. We'll be back at it on Monday at 6 p.m. GMT time.